pressure. Every scar, every hit only made me better.
Okay, hey, good afternoon, everyone. So this is Demetrius with Aquila Traders and Aquila Trading Academy. And so today we're going to jump in. I'm going to try to do a couple of recap videos, maybe once or twice a week or something on the overall market, some things that we're looking at just to kind of review some of the strategies that we're doing in our Trading Academy. And so the goal of today, we're going to take a look at, I'm going to start today with the mighty SpaceX. Unless you've been living under a rock, you know that SpaceX launched this week, and so it's one of the it's right now the biggest stock on the planet, and so all eyes are on this. So I'm going to take a look at this, kind of do a dive into our structural analysis, our technical analysis methods, and kind of take a look and see what is going on with SpaceX. So keep in mind, this is a brand new launch, so we don't have a lot of historical data on this. So what I'm going to do today is just going to kind of jump in here and do a quick markup based on how I would be looking at SpaceX. So I'm going to start down here on the 15-minute chart. Again, this only launched last week, and so we don't have a lot of data to be able to dive into something too far back. So we'll go back. Let's see, the official launch was this past Friday, so just a couple of days. So on the 15-minute chart, I'm going to jump in here and see what I'm looking at. So from a structural standpoint, we launched back here. What we teach in our Trading Academy is we look for supply zones and demand zones and sources. And so this is a little bit different than your traditional supply zone and demand zone kind of teaching. So there's some particular areas that I'm looking for in here. So the first thing I'm going to do is right now just go and see the high where we have, looks like this peaked up yesterday. There's a lot of external things that's going on that push the price up for SpaceX. But what's very interesting to me, one of the first things I'm going to note here is this area. I already have two pivot high and low areas here. But from my standpoint, this is the all-time high right here. This is right at $225. So the first thing that draws my attention to my eyes is this area right in here. So this is what I'm going to call what I would call a demand zone in here. So I'm going to draw this. This is again the 15-minute time frame. So this is a 15-minute demand zone. And so from our standpoint, the way I define the demand zone is this is an area of interest or range in the market where the market makers, so large money is what's moving all of these assets. So large money, I refer to them as the market makers. So this is an area of interest where the market makers have already told us that there's a high demand to buy this asset. So this 15-minute demand zone right in here is where most of the buying power is. You can see the market pushed up out of this area. And so I would be looking very short term to see this pull back to this area. This is around 202 to 195. So we got as high as 225. I'm looking for it to pull back to this area and possibly continue running. Right now, I don't expect any significant selling activity on SpaceX because again, it's very new. Everyone in the world is interested in it, and most people know, or at least projecting, that long term this thing is going to have a lot of upside. So that's the 15-minute look. So if you're looking at this right now, this 220, 215 area, I mean, this is not the place to try to buy this. If you missed the launch back here, I'm going to go back here when we officially launched. The IPO was at 135, but when the market actually opened, it was already up at 150. So the people who had bought this, during the IPO stage, they were already up $15 a share, roughly 10% or so, 10, 12%. So, they were already in significant profit. The market pushed up initially here to around the 180, 176 or so, had a pretty healthy pullback, and then just consolidated for a while and kept going. And so one of the things that we do at our Trading Academy is you don't see a lot of stuff on my chart. I hardly use any indicators. Our teaching method is to be able to read the market without using, I don't think there may be one indicator or something that we refer to, but it's all around market structure. And so that's our major focus for that. Let's jump to the hourly because I want to find this same area here in the hourly. And just for time's sake, I'm not going to take time to mark all of this up, but this is what I would call a demand zone. Actually, let me just do this one, and then I won't have to do the rest of them. So this is what I would call a 15-minute demand zone. So on the 15-minute time frame, this is the area where this should be pulling back to retest this. And if it holds the support, then we'll continue up and make a new high. All right, let's jump to the hourly. Hourly. And so on the hourly, this area is about the same. I would still be looking at this same area in here. Now, one concern on the hourly is there's a significant amount of fair value gaps back here. So these areas down here, I would take note of these areas. I'd say right in here, there's a pretty significant fair value gap. So this is between $178 to $182. I am going to go ahead and mark that. This is what I would call an H1 fair value gap. Okay, so this fair value gap area here is another high probable area that SpaceX needs to fall back to. And this is for long-term healthy, market sustainability, I would call it. So for the market to continuing to be stable there, that's what we would need to see. Okay. So that's pretty much it for SpaceX. I would say this upper side up here where I have this arrow drawn, this is around the 220 area. Short term right now, I would expect this to pull back to this first area, 15-minute demand zone, and likely to this H1 fair value gap before we continue moving forward. The only way I'm saying I have this area here marked as what would invalidate this in my mind is if we come up here and close back above this 220 area and it ultimately make a new high. So until we make a new high above 225, this is the area of interest for buying right now. Okay. All right, let's jump to some other ones that we've been watching for quite a while. And I'm going to go to Nvda. Nvda has been doing extremely well. A long time. I'm going to go to a higher time frame on that one because I want to take a look at an analysis that we did a little bit earlier on Nvda. And let me see what's going to be the best way for me to pull that up. Let me go into another trading view window, because here for Nvda, what I want to point out is the what led us to this. How did we get to where we are right now? So I'm trying to find one of these ideas we posted here on Trading View. And yeah, okay, so this is one from May 21st. I call this one Dip That Chip. Nvidia had great earnings, so why is it down? So let's go in here and look at this because I want to talk a little more about how we read market structure and use this one as a good example. So at this time, the price of Nvidia was around 219. We initially started looking at this around the 220, 230 range. So Nvidia got as high as 236. At least that's what from the daily chart. And so our analysis at that time was showing that here, Nvidia, we need to get down to this $200 price range. This was the daily demand zone. So the same kind of structural thing I was just talking about with SpaceX. This is why Nvidia had fallen down to here. So from a daily time frame, this was our all-time high. All-time high here. And so the daily demand zone was down in this area here. So this is the area where, again, the market makers, in my definition, the market makers have already told us there's a high demand to buy this asset. This is down between $196 and $200. So the H4 was temporarily had some demands up in here, but at the time we made this post, it was like this H4 demand zone has to hold. On the 4-hour time frame, there was a pretty strong demand here, but it was being tested at the time. And so as of that date, May 21st, we were able to pretty clearly see here that if Nvidia did not hold this 219, 220 area, that it was going to fall down to at least between 196 and 200. And so let's go forward a little bit and see, and you guys can come on here if you want to take a look at that on we do these posts from time to time on TradingView. So where we are now, this was our analysis at that time. There's been a daily and H4 structure that's been showing is not ready to take off, not yet. So we're not ready to start chasing this thing. We're looking for it to hold. The H4 or the daily shows that it could come down to this 195 to 200. That's just pure structure. The stock was already way overextended past the daily demand zone. So what we do not like to see is, especially on a high time frame like this, the daily. If the daily is showing us that the last demand zone is down here and we're already extended this far, it's like a large Jenga game. You know, the higher those stacks get built, then the more likely this thing is going to collapse. And so down here, it had a high probability of coming down to this daily zone. So what's next here is the daily demand zone is pretty strong, and it should hold Nvidia as long as the overall market is still healthy. We need to closely monitor this daily demand zone to confirm if the market will indeed hold. And I mentioned going to the H1 at that time. So this is where we expected Nvidia to fall. So let's fast forward in here. And we can see and look. And so that was our analysis as of May 21st. As of today, you can see here on June 9th, Nvidia did come exactly down to this 200 area, showed some support, showed some strength, and now it's pushing back up. So this is a way we're learning to read, and it's applicable regardless of the asset. Let's take one more look. Another one I want to look at is Broadcom. And so Broadcom is AVGO. And I'm going to look at the analysis we did on Broadcom. I don't think we posted this analysis on TradingView, but we did this one in another separate channel. But I'm going to take a look at this one. Let's see if I have that analysis here. Let me pause just a second, guys. Okay, guys. So yeah, let me pull up this analysis we did in here, because Broadcom has made a pretty substantial drop here. So I'm gonna go to I've got this in here somewhere. Broadcom. Okay, yeah, Broadcom report from May 15th. So this one we did for another client. It's just, but I want to look at the details of this, because we want to look and see again how we read the markets and analyze this. So let's look at this. So Broadcom is one of the hottest stocks. Of course, Broadcom is booming. So this was before the launch. Before Broadcom's last earnings report. So at this time, the stock price was right at 427. And so this is the analysis that we did. And again, this is all structural. So I'm looking at Broadcom here. This was on the daily, or this was the weekly. So the weekly chart. So again, very high time frame is what's going to give us, the true picture of what's going on. So the things that I mentioned with Spcx, and then again with Nvda, this is what we saw on Broadcom. So look at this. This was the weekly, and so we were already up here. We got as high as $440 or so. But look at the extension on here. The last weekly demand area, we would find this weekly demand zone down here in the 300s or so. So we had to back up to find a stronger support area. And so I'm going to look at the analysis here. Our target for this was, look, Broadcom was going to fall back down at least to this. The target was this 357 to 362 area. There was a fair value gap here between 382 to 385. So this 380 area was the minimum area for Broadcom to pull back. Again, this is prior to their earnings report. So several analysts had already come out and said, hey, Broadcom is poised to go pretty high. We're looking for this thing to go to $550, $600 or so. And I don't doubt that. I think that it has the potential to do that. It's just one of those not yet. And so let's go into how we, developed this, or how did we determine that these should be our target areas for this. So what the chart is saying, you got a strong impulsive move up from this $300 area. So back in here, when Broadcom dipped back down to this 290, 300 area, this is a huge push up. So the market is showing great demand. Again, the problem is that the market makers or overall market was not satisfied. So a clean break of structure. So we teach break of structure, and break of structure from our standpoint is different than most traditional ways. We're looking for specific things that the market is going to show us. So we had a clean break of structure up here, demonstrating a strong demand that was back here that pushed this up. Then price is now extended far above the last strong demand source. So that's a major issue. There are multiple inefficiencies left below here. So there's a lot of large players that's looking to get into this stock. So we saw this reaction up here, the 400 to 408 area. This is where sellers last tried to push it back up. So when we've had the push up here, and this was, I'd have to go to the lower time frame. So let me switch back to the actual chart here. Okay, let me go. So this is 4 hour. So back here, this is the area that I'm referring to. So when it first pushed up above 420, 430 or so, sellers drove this back down. But notice how this area held. The sellers were only able to push it back down to around this 400 to 408 area. That's what I was referring to there. So once this held, this let us know that this was going to push back up. And again, it got as high as almost 500 on the lower time frames. Okay, so let's go back to the analysis here. Okay, so it had already been very overextended. Using the current price, it was around 425. Here's how I would structure the dollar cost average plan. And so we did this one particularly for a client that was looking to leverage, either use leverage or to dollar cost average into Broadcom. So one of the first things that we were screaming is, hey, you're already in this stock. You need to get out. This back again, the 480, 470 area or so at the time we did this. So our alert report was, what was the price then? 427. Yeah, so this 427, 430 area, 420 area. Hey, you need to get out of this because there's going to be a substantial drop coming. So the first one is, let's look at the entry plan. We were able to define 3 different areas of potential entries if you're going to be a long-term holder of this stock. The first one was wait for at least $400. 400 to 408. That's about a 4 to 6% drop. This is the place to make an initial entry on this. And this is all based on, again, the structure either between the daily time frame or the weekly. The second zone was between 382 to 385. This was the primary institutional rebalance. So this was the most likely place that the market was going to go, was here. If there had been some external factor, something pretty strong, it could have held Broadcom up above here, but the most likely place was it was going to drop here. And then lastly, this would be a golden chance to buy if it came down and filled this 357 to 362. But make a note on Broadcom. That's why I'm spending a little more time on this one. This area here, as large as Broadcom is and as much impact it has on the overall market, the whole AI infrastructure and everything, that this is a fear, I think it's a fear panic area. So if Broadcom gets down into here, there's going to be massive panic on this and people are going to be dumping this stock. And so this is the area where you want to load up in. And this is, again, this 357 to 362 area in here. Okay. And so I'm not going to go through the rest of this. This is a detailed plan, okay, exactly how to execute this, how to get into it. But the point of what I'm reviewing today is how did we get here? And so let's go back to TradingView. So Broadcom has fallen. This today is June 16th. You see we've fallen back down. So past this 380, 390 area, we got pretty close to this 357 to 362. And I want you to look how close we came to this. This came down to 364.85. So this was the ideal area, to load up on Broadcom. So if the market already came here, pushed back up a little bit, and so this is has proven again to be, pretty high probability area. And so what we're looking at from this point forward is, as I mentioned earlier, this is a fear collapse area. So if we do not hold this area here, I have one last area identified below here. That's a fear collapse area, which is going to be down below the 340 to just say 340 to 350 ballpark area. Right. So if we come back down here, this area should be, and most likely will get tested again. If you're a long-term holder, I would be loading up on this. We trade these on with leverage. We trade CFDs, contract for a difference. And so we're buying. I have entries had entries at the 380 to 390 area. More entries here in the 357 to 360. I think we had a few in between here in the 370 or so range. But what I want to highlight at this area here, if we get down below this 340 area, this is one to just completely get out. And this, I think the only thing that's going to lead us to this is if there's a total, tech market collapse, something substantial externally happens, and, the NASDAQ, drops 20% or something like that. That's going to cause extreme fear. And so if it gets to this area, I'll be getting out of those positions, those long positions, because the next area for that, if this fails, is going to be this high demand area down here. It should bring Broadcom back down to the 290 to just say 290 to 300 area. And so it'll be a smart move to get out of it if this area here collapses and just pick back up down in this area. Okay. All right. I think that's pretty much all I want to try to cover in today's review. I don't want this to be too long, but hopefully this gives you a general idea of what we're doing in our trading academies and how we're learning to read the market structure and, just overall read the markets regardless of the asset. So in today's case here, we reviewed 3 different assets. We looked at Spcx, we looked at Nvda, looked at Broadcom, and so this applies regardless of what you're looking at. So hopefully this video helps. Please leave us some comments, like and subscribe if you enjoy the content that we're looking on here. Check us out on TradingView. We do have a few posts, have not done a lot, but it'll be under Aquila Traders on TradingView, and that's where you're able to go in and see some of the analysis that we've done. Over time, we've done several ones on crypto. You come in here and see some analysis on Bitcoin. But the whole purpose of all of these that we do, we're typically just reading the market on that particular asset and focusing on how the market structure itself is determining where our entry should be, where our exit should be, and where the overall trajectory of these assets are going. Okay, so hopefully you guys enjoyed this. Have a blessed day. I'll see you next time.
Trained in the fire, I was built for the pressure. Every scar, every hit only made me better.